Hello, this is Rich Canleone coming to you from the CME Group trading floor. Before we get started, I think everyone in the financial community is kind of stunned by the passing of MarketHEIST at CNBC, anchor at Squawk on the Street, and I think all of us would like to extend our condolences to everyone there at CNBC and his family and so forth. The name of our segment today is going to be the S&P market. Still has a tilt to go lower, but on the fence at this point, particularly because we've filled that very important gap. So on the fence in that gaps, once they're filled, ordinarily become a good building, a good block building area, especially if it's a gap that is relatively wide. And if you recall, the last several times we've been talking about it, you're talking about an S&P cash gap that was about $6.50 wide, went from roughly the 19 and change area. But at any rate, this morning, as you can see, we've completely filled the gap, developing a little bit of a base from there, and the S&P futures in that 02 area are starting to hold their ground. The reason why I say, however, you're on the fence is that in the next couple of days, we have some relatively strong numbers. Obviously, you saw the numbers this morning just in review quickly. The durables, very disappointing. The housing numbers somewhat on the stable side, but let's not forget you have some gigantic numbers coming out tomorrow. You have the revision on GDP, and also you have the claims numbers. One thing you want to keep an eye on in terms of the claim numbers on the fundamental basis is the 4-week moving average. The 4-week moving average now has been up above 400,000 in claims. That is something that everyone keeps an eye on, and more importantly, that is something that is one of the bigger numbers that institutional traders, big pension fund managers and so forth keep an eye on. So if that number is bad tomorrow, if that number comes out as a two-headed dog, what you'd be looking at in terms of technical levels on the downside in the S&P, you recall that on the 18th of April, the cash S&P traded down to 1294.46, and if I recall correctly, our low in the futures, it was in 92 area, 92.5. I would look to revisit that. Would I look to buy that with both hands? Absolutely. I think today's action, in contrast to what might occur tomorrow, okay, today's action is a buy that is a short-term buy, and look to exit it if in fact we reclaim that cash gap, because the cash gap, don't forget, the top end of that was in the 19s. So the futures being at a fair value discount of approximately minus 180. On the today's bounce that we would expect, that would be your exit trade. Look to get out in that level and perhaps even initiate some sell side action and a short that you might want to take home overnight. Okay? If in fact we close the weekly up above that gap, I think you're looking for a tremendous extension into the next leg of the rally that might lead you into perhaps the holiday and into the beginning of the June expiration cycle. Okay, that would suggest that we might actually, if you look at a retracement, we might actually get the futures back between 1330 and 1335. The contingency, of course, is if we close on a technical basis back up above that gap. That's how I would leave it from there. In terms of any other significant levels, I would just play that for the time being. Today's action, you want to be long. We went into that gap. We held the gap in review. I think the extension on the upside, the 1319, 1320 area. Don't get married to your position, however. Trade smartly. Keep an eye on the technicals. Rich Canleone signing off from the CME Group trading floor. Thank you.